I'm Priscilla Barrera with the Investing News Network, and here with me today is Chris Berry of House Mountain Partners. Chris, thank you so much for being with us.
Thank you for having me.
All right, so we're here at PDAC. We're in March, last month of the first quarter. To start, can you tell our audience a little bit about the trends you've seen so far in the lithium space?
Sure. I think one of the interesting things, to your point, we're just through earnings season, and I think one of the bullish takeaway is that when you look at what the lithium majors are saying, they're all planning now for at least 1 million tons of lithium carbonate equivalent demand by 2025 in 6 years. And I actually think it's going to be really tough for the industry to get to that level just because of weather challenges, technical issues, and financing difficulties. But I think broadly speaking, if there's a bullish takeaway from the most recent earnings season, it's that the demand is still there despite some of the challenges that we've seen on the pricing side.
All right, and last year when we spoke, one of the things we were talking about was about Chinese lithium prices and how everyone was so focused on them. Now, as you're saying, earnings season, majors, SQM, Albemarle, they were saying their prices increased a bit last year. Do you think that's going to be a trend we will see this year? And will investor focus will finally change from focusing so much on China?
I don't think investor focus will ever shift from China just because it's such a big portion of the overall market. With respect to pricing, I think what you'll see in 2019 and beyond is with respect to outside of China on the contract basis, prices that are broadly flat. Maybe they swing 5% up or down either way, but you're not going to see a huge swing up or a huge swing down. I mean, I think the market is just sufficiently tight. On the China side, you're actually probably going to see some upward bias in pricing, I think, just because, again, on the demand side, it looks quite strong and quite robust. So overall, I would look for both inside and outside China pricing convergence on the lithium side in 2019.
All right, and moving away from prices, let's talk about the stock market. Obviously, we need to talk about the Nemaska Lithium situation. They announced a financing shortfall. I guess my first question for you is, how often do we see this type of cost overruns in the battery metal space in general?
Well, this one is obviously rather large, I think, relative to other capital cost overruns, but you don't have to go back far in lithium history to see other companies run into financing challenges. I mean, back in 2012 or thereabouts, which was the last sort of bull run in lithium, you saw 2 or 3 hard rock projects that ran into some financing challenges as well and just didn't get built to the scale that the market thought they were going to. So it's not rare, but this one is particularly large.
All right, and we usually, when we talk about, we tell investors, well, you should be looking at the cost curve, don't focus so much on prices. But when we see this type of thing, how can investors really trust those estimate reports for lithium projects?
Well, I think, irrespective of capital cost overruns or anything, you always want to view these economic reports or these technical reports with not a skeptical eye, but you really want to comb through them. I think that, there's always a disclaimer, whether or not it's a PEA or a feasibility study, there is a margin of error, both the upside and the downside. And, when I look at any lithium project globally, I don't care if it's hard rock or brine or clay or what have you, it's got to work at around $11,000 lithium. So obviously, as we talked about earlier, we're at higher prices today, and that's great, and that implies very strong margins, but I wouldn't count on $15,000 or $16,000 lithium out at 2025. I think you want to be looking at almost any project, irrespective of what it says in the feasibility study. Does this thing work at $11,000?
So then with the Nemaska Lithium situation, do you think investors could have anticipated anything when looking at the estimate reports?
It's hard to say. I think that every investor is going to have an opinion on a project, especially one as high profile as Nemaska. I mean, this is a company that raised over $1 billion to put this project towards on a pathway to production, which is incredible and it's admirable in its own right. And so, I'm not sure if I can really tell you with any level of certainty that, an investor could have flipped through the 500-page document and said, oh, this doesn't make sense or that doesn't make sense. Everyone's got an opinion, but obviously the capital cost overrun took everyone by surprise.
All right, and with this negative sentiment in the lithium space, do you still think that lithium is a good investment?
Yeah, I do. I think, look, I'm speaking on a couple of panels when I'm here at PDAC, and my whole sort of theme is that we're at the end of the beginning of this cycle, right? Just like Winston Churchill said a long time ago, we're at the end of the beginning. And so my sort of general point is, if as an investor, if you're approaching the lithium space or cobalt or graphite, today the same way you were 4 or 5 years ago, you're not positioning yourself well. You're not positioning yourself for success. What you want to be thinking about now is what's happening further down the supply chain. What are oil and gas super majors? What are OEMs? What are cathode manufacturers doing to position themselves for this very broad and very powerful shift around automotive technology and also around energy storage? So it's a different sort of, I think, view and approach in terms of investing in battery metals today.
All right, and in terms of junior miners, what do you think it's next for them? Where do they go from here?
Well, look, it's a tough financing environment, and so I think that for those that are financed, it's all about execution, okay? They've got to basically get this right, and I think if there is one challenge or one thing really facing the sector overall, it's that the lithium-ion supply chain has never seen this much interest and it's never seen this much stress. So, quite honestly, no one along this supply chain is really sure what the industry is supposed to look like in 3 or 5 or 10 years based on 1 million tons of lithium demand. And so that's why I think, for, again, those companies that are financed and they've gone through the feasibility sort of, gauntlet, they've got to get it right. And there will be, obviously capital cost overruns and production delays, but generally speaking, getting the execution right is what those developers have to do. On the exploration side, it's going to be very tough, okay? Because, look, the funding that was there, say, 1.5 to 2 years ago isn't there today. And so now I think it's all about positioning yourself out over the next 3 to 5 years if you're one of these juniors. And quite frankly, it's more about survivability than anything else.
My final question for you today, Chris, for the new investors that might be watching us today, why do you think it's so important for them to understand the battery supply chain and how it works and the challenges that it may face going forward?
Well, I think what's happening with respect to mobility and energy storage, the battery supply chain is right at the center of that. And we're witnessing this incredibly powerful, albeit slow, transition around how we get from A to B and how we generate and utilize and store energy. And I just think that the battery supply chain represents arguably the greatest opportunity to play that shift. You can look at autonomy, you can look at different battery technologies further downstream, but just with respect to the metals and the mining, security of supply really is, in my opinion, the most crucial aspect of this whole supply chain. And so that's why you really want to understand it as these markets grow and evolve.
All right, thank you so much for joining us today.
Thank you.
Once again, I'm Priscilla Barrera with the Investing News Network, and here with me today is Chris Berry of House Mountain Partners.